Hello there and welcome. We're about to jump into a topic that can cause a bit of head scratching when it pops up on your payslip, the BR tax code. Now, this whole discussion has been put together by the experts over at ProTax Accountant just to bring some much needed clarity to this for UK taxpayers. So let's get this thing decoded, shall we? So, have you had that moment? You're glancing over your payslip, maybe with a cup of tea, and then you spot it. Those two little letters, BR. And for a second, your mind starts racing. Wait a minute, is that right? Am I paying more tax than I should be? It's a totally normal reaction, but don't you worry, we are about to clear all of that up. All right, so let's get right to the heart of it. What on earth does BR actually mean when you see it sitting there on your payslip? And here it is. It's actually pretty simple. BR just stands for basic rate. That's it. When you see this code, it's basically an instruction from HMRC telling your employer to tax all of your income from that specific job or pension at the basic rate without giving you any tax-free allowance first. And what is that basic rate, you ask? Well, for England, Wales, and Northern Ireland, we're talking about a flat 20%. This means every single pound you earn through that income source gets taxed at 20% right from the very first penny. No messing around. Now, this is the crucial difference. See, a standard tax code, something like 1257L, has your tax-free personal allowance of £12,570 baked right in, so you only pay tax on what you earn above that amount. But the BR code? Nope. It has no personal allowance attached. Every single pound gets taxed. And this usually happens for a very good reason. Your tax-free allowance is probably already being used on your main job. So, while seeing a BR code might feel a little alarming at first, there are actually some really common and often perfectly correct reasons for it to be there. Let's take a look at why it might pop up. By far, the most common reason is that you have a second job or you're receiving a pension on top of your main salary. HMRC applies your tax-free allowance to your main source of income, and then to make sure you're taxed correctly overall, it puts the BR code on your second one. It can also show up as a temporary thing when you start a new job, just while they're getting all your details sorted out. You know, hearing the theory is one thing, but seeing it in practice really makes it click. So let's take a look at a super common situation. We'll use a hypothetical nurse named Sarah who works two different jobs. Okay, so check this out. For Sarah's main job as an NHS nurse, she's on the standard 1257L code. So her taxes worked out on her earnings after her personal allowance is taken off. Simple enough. But for her second job as a private carer, that's where the BR code kicks in. The full £15,000 is taxed at 20%. The system is actually designed this way to make sure the right amount of tax is collected from all her earnings combined. Now, even though the BR code is often correct, we all know that mistakes can and do happen. So it's always a smart move to double-check your code. Let's quickly walk through exactly how you can do that. And if you're wondering why it's so important, just look at this. This number from HMRC is pretty staggering, isn't it? Over 1 million people on the wrong tax code, which led to over £1 billion in overpaid tax. A quick, simple check could literally put money back into your bank account. The good news is, the process is actually really straightforward. First, just grab your payslip. Then, honestly, the easiest way to check everything is to log into your personal tax account on the gov.uk website. It's all there, updated in real time, and you can see exactly what info HMRC is using. If anything looks off, you can contact them right away. Okay, let's touch on a slightly more technical point, but it's an important one. It's whether your BR code is cumulative or non-cumulative. It sounds complicated, but it just affects how your tax is calculated week by week or month by month. So think of it like this. A cumulative code is always looking at the big picture, your total earnings for the whole tax year, and it's constantly trying to self-correct. If you overpaid one month, it'll try to balance it out the next. But a non-cumulative code, you'll often see it with a W1 or M1 next to it, treats each payday completely on its own. It has no memory of the past, which is why it's often used as a temporary fix. Whew! We've covered a fair bit of ground there. So let's boil it all down. What are the key things to remember, and what should you do next? All right, here's what you really need to take away from this. 1, BR means 20% tax, no personal allowance. 2, it's super common and often correct for second jobs. 3, and this is the most important one, always check your code online on the gov.uk website. Because of number 4, if it's wrong, you could be one of the people who've overpaid. And let's be honest, tax is rarely black and white, is it? Everyone's financial life is completely unique, so what's right for Sarah the nurse might not be what's right for you. If you've gone through all the steps and you're still scratching your head a bit, that is perfectly understandable. So, if you want real peace of mind and you want to be absolutely certain you're not paying a single penny more in tax than you have to, getting some expert advice is a great way to go. The team at ProTax Accountant can give you that professional, tailored help for your specific situation. Thanks so much for joining us for this discussion.